Today I'm going to go ahead and do a quick look in for a rental cash flow analysis for one of my new listings, 8-10 3rd Street in Norwich, Connecticut. I'm going to look at it as a house hack. So we're going to look at it using VA and using FHA and kind of see what that looks like. So my sheets are very basic. I mean, this is just a quick look in on a property. This is not a deep analysis. This is something that's going to take 10-15 minutes when I'm not filming myself to analyze a property real quick. So this is my form. It's in Excel. It has a few formulas, but it's, like I said, it's not crazy at all. So first thing here, we have our average monthly rent per unit. What I do to kind of take a look at that, I mean, I have properties in Norwich, so it's a little bit easier for me. Also, I'm an agent, so I have MLS. But you can go to Zillow, but for myself, I'm going to go to MLS. And then I take a look, we're down in this area here. So 3rd Street is right here. So I'm going to go ahead and take a look at properties. I already did this. I did some comparisons to the property that we have versus other properties that rented. And also I look at properties that are on the market because you want to kind of see what your competition is. And I really think $1,750 for a 3-bed, 1.5 or 2 bath side by side in Norwich is going to be good. This has good space, and we'll look at the property card too to go ahead and take care of that comparison. So that's something I do too. Let me just go over here to the property card. So here's the property card. I pulled that off the Norwich GIS. It does say it's a 4-bedroom, so 2 on each side, but it has that bonus room that's going to be utilized as a bedroom when you advertise it for rentals. Let's see, so square footage. So we're at 2174 living area square footage, so like 2,200 square feet, so 1,100 square feet per side. There is no common area, and it does have a basement. So I took that all into account when coming up with my market rent. I always really do it conservatively. I don't want to blow up the numbers and say, this can rent for $2,200 and it throws everything off. I like to be conservative when I run my numbers. So let's go ahead back to our sheet. We're going to go ahead and enter in the $1,750 both sides here. But remember, so we're doing a house hack. So we're really only going to have one side with $1,750. Because we're going to be living in the other side. All right. So that's very simple, right? I do a 5% vacancy rate. So that's calculates $8,750 a month, right? And it spits out my gross monthly operating income, $1,662. Now you might ask, why don't I put in the other $1,750 for my side? Because I want to go ahead and look at what it's going to cost, how much money I'm going to get in on this property to offset my mortgage and my expenses. All right. So generally house hacks, you're going to be managing yourself. So we're not going to go ahead and put any fees under management. Property maintenance, same thing, right? You're going to be doing it yourself. So let's just throw $50 in here a month, maybe for supplies, for gas, for lawnmower, that type of stuff. So we'll throw $50 a month in there. Now, if I'm analyzing this as a investment property, totally different, right? This is a totally different situation. We're using 2 units, full month. We're probably putting in property management fees. Maintenance is going to be higher because we're not going out to the property all the time. So that's something we're gonna do. So let's go ahead and look at property taxes. So if you're analyzing a property that's currently on the market, there's a couple ways to do it. You can go right to the MLS, and we'll just go ahead and let's clear this search out. Let's start a new search. 3rd. Yeah, this property is on the market currently. just going to do a search here. It's spelt funky, so we'll just map results. Let's go up here. If you hear the wind in the background, and we're in the middle of a storm, so I hope I don't lose power. Again, I'm in Connecticut, so this is Norwich, Connecticut, so I'm the eastern side of Connecticut. All right. We want multifamilies. Gotta zoom back in here. Here we go. Here's the listing. So that's why I couldn't find it. It's the number not spelled out. So this is our listing here. So we can find property taxes in the listing. So the property taxes here are $5,079. Or you can always go to the tax collector's website and get that information. But MLS pulls it directly from there. So I know I put it in, so it wasn't manipulated at all. But it's definitely something you want to double check. So that's $423 for taxes a month. All right, so 423 goes here. So yeah, this is all monthly operating expenses. All right. So insurance, right? Who knows, right? We having such a hard time with insurance nowadays, trying to estimate what insurance is. Luckily, for me, I have a property that I own that's about the same size, maybe a touch bigger in Norwich. So I can kind of bounce off insurance rates on that one. Or what I'd like to do is go right to ChatGPT. Right? I pay for the $20 a month, right? It doesn't give you an exact number, but kind of gets you in that ballpark, right? So let's take a look. I have a couple things here about this property. So landlord insurance. That's going to be a little bit different than owner-occupied insurance. You'd hope that owner-occupied insurance might be a little bit less than landlord insurance. Of course, then you're using your, it might be more because you have items in the house as well. So let's just say older house, let's say $3,000. Let's say $250 a month here would be a good comparison, throwing a number there. All right, so we're going to use $250. Now, obviously, I don't own or occupy my property, but let's take a look in comparison there what my property looks like. So this is my property. So property insurance for me is $23.59. I believe that comes out of escrow, so that should be pretty accurate. So that's $200 a month. So maybe we're being a little bit conservative and going on the high side, but I'd rather do that when analyzing a property. All right, so there's no homeowners association fees. There's nothing there. Improvement reserves. We're not going to get into that right now. But if you went to the property and you said, "Oh, we needed new roof, and we're going to do it in 5 years," you might want to put some money in there for capital improvements. So utilities, I'm not going to take into account the electrical for the owner-occupied section because that's going to be very subjective depending on how warm you like it. I mean, it is oil heat, but we're not going to go ahead and tackle that right now. We're just going to look at the utilities for water, sewer. So in Norwich, water and sewer comes in as one charge, and the property owner needs to pay it. It doesn't mean you can't bill it back to the tenants, but it is an expense on the owner. So again, I went to chat, right? Talk to chat about where the prices are in Norwich. Norwich Utility is an excellent utility company, but they are on the expensive side when it comes to utilities. So water, sewer, in this case, the low usage would be $271, in the middle of the road $421, and then a high usage would be $515. Now that's a month, so that's a pretty high expense. So I went ahead and bounced it off what I pay in my unit. So we'll go there real quick. So utilities right now is $2,700. I don't think I paid utilities for December yet, and this is something that's billed monthly. So 27, say 3,000. So 3,000 divided by 12, it's like 250. So 250 a month. So they're saying 271 on the low side. I'm paying 250. So you see they're on a little bit of the higher side. So let's say 300, right? We'll say 300 a month just to be safe here. 300. There is no common electric in this property, so we're totally fine there. We don't have to take that into account. Real estate legal fees, that's for any evictions or anything like that. We don't have to worry about that. That's more of, I'm going into a property. I have 3 tenants that I need to evict. I got to build that into my price. All right. So your NOI, your net operating income, your income doesn't look very good, right? Just under 20 grand, and your operating expense is 12,276. And that is because we are living in one half of this unit. All right, so let's go down. Let's just say we're going to pay asking price for this, just for the ease of the exercise. So that's it's like 330. I think it's 329.9. So we'll use 330. So this is where also you could say, all right, my property valuation, so my offer price was this, but the actual price was this. So this would be like if you had an appraisal done and they appraised for 350, but you only paid 330. So you basically have that $20,000 built-in equity. Again, this is a very simple sheet. There's not a lot to it. All right, let's look at down payments. So on this side here, a VA loan, right, you have a 0 down payment. So we're going to put 0 in there. On this side, FHA, we're going to use 3.5% in an FHA owner-occupied property. So 330 times 3.5% is $11,550. All right. Any improvement budget, we're not going to get into improvements right now. We're just going to leave that blank. And then our loan amount here would be 330 for the VA. And then it'd be 318, 450 for the FHA. All right. Mortgage lengths, right? Both are going to be 30-year mortgages, right? Now, interest rates. So, again, I'm lucky enough that I'm an agent, and I have some, some avenues that kind of check this type of thing. We're going to go ahead and use one of, I got to find it here. So one of our partners with Compass sends out this nice financing solution sheet for properties. And it has a couple different options here. So unfortunately there is no FHA or VA, but generally that's a little bit lower than a conventional type loan. So it's probably, let's do this. Let's hop into chat and let's see if we can ask chat. No, we'll just ask chat. Current FHA and VA. Because I think they're going to be less. Yeah, so they're 5.6 to 6, 5.7. So let's just use 6. All right? That might be high. I think they're in the high 5s right this second. We're December 19th, 2025. So I think they're in the high 5s. We're going to use 6 for this exercise. 6%. Oops. It's really windy out there. 6%. All right, 30 years. Closing costs, right? So they vary quite a bit based on lenders. So, but for this exercise, back to old chat again. Let's look at some closing costs. So estimated closing costs for VA, $12,250, and FHA, $14,000. So we'll go ahead and plug those in. I think this one was the FHA, $14,000. And what did I say? $12,250. All right. So here we go, right? If you're looking at it in a numbers situation, it is not very good for you because you're looking at it as an investor and thinking, I'm not making any money. But remember, your total monthly cash flow is in the negative $13,058 or $12,088, but that is without having to pay any rent. So you're living in this house for free. Well, for $13,050, which is, we've already determined, is $400 under the market rent. So in this case, you could assume, if you're going to live in the same type of home, that your net profit per month is $400. I hope that makes sense. Now, maybe you get a roommate and your roommate helps pay, right? This is a 3-bedroom, or it's a 2-bedroom on the property card, but it has that whole extra 3rd floor. They help you pay for your mortgage. But some people want to be able to cover 100% of their mortgage with the rent roll that comes in. Sometimes you have to look at it a little bit different. You know, if you're trying to build generational wealth year after year, maybe you're living in this house for a year and then you're turning it into a rental, whether you refi it or however you do it, and now you're using your VA or FHA somewhere else. You know, you're building a portfolio and building generational wealth. I think that's really what this exercise kind of goes through. So that's kind of how I do it. I usually don't do it for house hacking and VA and FHA, so it's kind of interesting. This is the first time I've done it this way, and I hope the numbers kind of, you see where your cash flow is, even though it's kind of hidden. It's not really true cash flow, but it's also tax-free. So that's all I have for now. So thanks for joining me, and if you ever want to chat more about real estate in Eastern Connecticut, I'd be happy to. You can always find me and DM me here. All right, thank you.